Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glenn Sutherland.
Welcome to another episode of A Canadian Investing in the U.S. My guest this week is Michael Kharlab. Michael, tell us a bit about yourself and your investing journey.
For sure,
Glenn.
And first of all, thank you for inviting me.
No problem.
So I've been investing in real estate for about 11 years now. Started in 2010. Purchased my first property, which was a condo in Florida, in April of 2010. I did a couple of deals in Florida, and then in 2013, I was introduced to a real estate investment educational program called Rich Dad Education. Probably many of your listeners know about it.
Yeah.
It's different names, Rich Dad Education, Tiger Legacy, that was the latest. So I completed the program in 2014. I did my mentorship. And I started working with, doing my own deals. I started working with investors since. I was full-time employed by then. Formed a company called CFP Group with the purpose of serving what I call busy professionals. People just work. They want to build wealth with real estate, just need some help, education, guidance, who simply don't have time or desire to do it on their own. And in 2017, I left the workforce and I became full-time real estate investor. So that's what I've been doing since.
That's
awesome. So we work in Canada and United States. We got over 110 investors at this point of time, 6 countries. Yeah, do a bunch of deals.
Yeah, it sounds like it. So when you started off doing your Florida condos, I'm guessing the early days you're using your own money?
Yeah, so the first 2 deals was me and a friend of mine, which we became partners, obviously. We used Land of Credit, HELOC. In Canada, in 2010, you could not buy a property in the United States getting local mortgage. And I'm talking about residential. So obviously we have to use our own money. So the first 2 deals we did using HELOC in Canada, buying cash in the United States. Then we couldn't do anything because we left without any money.
Yeah.
And nobody was giving mortgages till 2013 in US, pretty much. Then we were able to refinance the two condos, and we bought a triplex after the refinance.
Okay. Yeah. That's cool. So did you do any renovations to this, or you like the market brought these properties up to be able to do the refi?
Yeah. So the first property we bought, somebody bought it from the auction. They did the rehab and we just bought it, nothing to do pretty much. We knew that person was making money on us, but it was fine because it was just the first deal.
Yeah.
The second one, it was a foreclosure that we were able to get in Miami, and we did a little bit of renovations, but it's condo.
Yeah.
It's way less than what you need to do compared to the single family.
It's interesting you mentioned the auctions. Like, it's one thing that's always been very interesting to me. That's interesting to start there. Did you have someone who would go to the auction and bid for you, or was it an online auction in Florida?
No, we didn't go to the auction. So the first property, somebody went, they got it from the auction, they did rehab and sold it to us.
Okay, yeah, I've bought like that before too.
Was
Yeah.
the foreclosure. So the bank couldn't sell it at the auction.
Yeah.
So it was foreclosed and we bought it from the bank.
Gotcha. No, that's a good strategy to do it. Okay, so forward track a little bit. You've refinanced those properties. You've done some extra education, and now you're taking on investors. What kind of stuff are you trying to do now?
Well, we're doing bigger projects now. Probably
Yeah.
You can see the picture in the background. So it's 28 units that we're building in Phoenix. So so I've done a bunch of residential deals in Canada in 2014, 15, and 16. And then in Canada, the prices went up. There was a period of time, 2016, similar to what happened this year, actually.
Yeah.
It was craziness. Prices went up, multi offers. You just couldn't buy anything. Because the price went up, some deals stopped making any sense. So my partner and I said, let's go to the United States and start doing bigger deals. So I was looking at Texas and Arizona.
Yep.
To do bigger deals. We ended up doing projects in Arizona, but Texas obviously was a good place too. So our model today is, because we're in Toronto and the projects are in Arizona, what we do, we partner up with local developers or local, what we call sponsors, project sponsors.
Yep.
They bring the deals, they bring the skills, and they're responsible for what we call day-to-day operation of the project. we become a financial arm, a capital arm of the project. We bring our investors, and obviously we do consulting, and we become co-partners on the project. So typical deals, what we call is build for rent. We buy a piece of land and we build a bunch of properties, single family residentials, let's say between 14 to 50. But the idea is not to sell them one by one to end consumers and buyers. The idea is to rent them out, and then you can either refinance or sell the whole project as an income producing asset to a big buyer. Could be somebody, high net worth individual or group of people, or in some cases, it's just companies that looking to place their funds. So yeah, so that's typically what we do. It's either build for rent or land development that we do, or some cases we bought a couple of office buildings that we do repositioning. So it's larger commercial deals today.
Yeah, so I was just going to say, so this is, you're going to keep the property all as one address, right? You're not going to sever it up and do residential loans. You do one commercial loan over the whole thing and keep all the lots separate. Is that right?
So you get one commercial loan for construction, to purchase
Yep.
of the land and construction, and whatever we need to top up, we bring our investors.
Okay.
But when we build, every property has its own title. So it's a single
Okay.
that we can sell if we want, but by the definition, what we want, what we do is we build them all at once. And then people don't get, because it's a rental, the construction cost is a little lower, the finishes are lower, and people don't get to choose what kind of finishes they want. So speeds up the construction. But if we decide to sell one by one, we still can do it. And that's the beauty.
Yeah, that's really the beauty, because multiple exit strategies, right? You can sell it to
Yes.
one person, you can sell it to a whole like another syndicator or something like that. And I'm guessing when you're raising your money, it's like in a pool. You're not like this property, this property, this property. It's not like all separated out per investor.
Yeah, so we raise the money per project.
Okay.
Okay, we've got over 10 projects going at the same time, pretty much. So for every project, we open a separate entity. And when people invest, they invest in the entity. So this is similar to, let's say, owning shares in a public traded company. Just here we buy hard assets,
Yep.
land, but people get shares or units in the entity that owns the project. Okay, so it's not a person per house. It's person, I mean, a bunch of people per project. Yeah.
Okay, so then you're doing it's sort of set up similar to like a syndication, right?
Yeah, we open LP, which is limited
LP.
partnership, right? For Canadian investors, this is the best form today. For Americans, they mostly open LLCs, limited liability corporations, because CRA does not recognize it as a flow through. In Canada, we do it as LP. The difference between LLC and LP is that LLC could be one single person. With LP, the structure is you need to have a general partner and limited partners. But because we've got multiple people investing, so we typically become general partners and all investors become limited partners. So that's the entity that owns the project.
Cool. And then with these, since they're designed for rentals, what kind of finishes do you go? You're probably not going up to a fix and flip level of finishes, I would guess.
They're pretty decent.
Yeah. Okay.
But not the highest, $2 million homes standard. So you still get stainless steel appliances and hardwoods and everything, but some finishes could be higher. But again, it allows us to lower the cost. And when you do build for rent, the financing is different, because let's say the project that you see behind me, when we want to sell one by one, the lender would give us, let's say, money for 6 homes to build, and then we need to sell and sort of recycle the money. When you do build for rent, you need to build all 20 plus at once. So the construction is different. Construction and construction financing is different. So yeah, need to take that into consideration.
No kidding. And so just to kind of pry into your financing a little bit, would it be like if you're doing like single family homes where you're doing like a 90% leverage rate with the bank and you're raising 10, or what kind of, I know it's different with commercials. When I was doing my commercial shopping, the loan to values tend to be a lot lower.
Yeah, so we obviously it's different. So for commercial, typically a loan is broken into two parts. The first part is the purchase of the land. Typically, the lenders would go up to 65%. Some cases could be up to 70%. So we need to bring the rest of the funds. And then when the construction starts, we do it in draws, meaning we need to do complete part of the work. And then we go to the lender and show that we completed the work, and they give us money for the work that was already completed. So it's a little different in the commercial world.
Yeah. Oh no, I still do the draws and stuff. It's all just the land and the original startup is the main difference. Cool. Yeah. And when you mentioned you have to do them all together, I'm sure that skews your timelines a little bit longer. Like what kind of timeline, like how would these projects run? With the timeline to complete the renovation, is there a refinance? And then what's the length of the project you sell to the investor?
Yeah. So one of the reasons we selected Arizona is because Arizona doesn't have winters. We don't deal with unions, and we don't deal with basements, okay? Because the land is so hard, we don't dig. So the construction is actually much faster. Arizona became such hot market today, so the majority of the time goes to get the approvals from the city. But it's fast, it's extremely fast. So the fastest project we've done was 15 months from the acquisition of the land until the exit from the project. That included acquisition of the land, getting the permits approved by the city, construction, renting out, and selling. So that's 15 months. So, but typical project length is around maybe 2.5 years. Yep. Comparing to Toronto, typical timeline for a condo here is between 5 to 7 years.
Yep.
So our project's smaller, obviously, but way shorter as well.
So it's very appealing and sexy to a lot of people to have new construction. What are some of the disadvantages of doing this ground up construction?
Yeah, so construction is probably the most riskiest part of the real estate. There are typically four major risks that you have to deal with. Well, number one is that the land you buy could be contaminated, so you need to go through the verification that the land is clean. That's number one. The second risk is that the city would not approve what you actually plan to build. So you buy the land.
Do you do your inspections? Sorry to cut you off. Do you do the inspections of the land prior to closing? It's probably a condition.
For sure.
Yeah.
For sure.
Okay.
Yes.
Okay.
Yes.
Okay,
yeah. And yeah. So the second risk is the city needs to allow you building what you actually planned. You cannot do it 100% prior to the closing, but you deal with the city and you can understand what the city is going to oppose and whatnot, but it's still a risk. The risk number three is actual construction. In here you need to deal with the experienced partners, developers, because many things can go wrong. And I'll just give you an example of, let's say, COVID, right? You just come through your life and then, hey, what are you going to do? Right? Or the lumber prices. You budget for something and the lumber prices went from $300 a year ago to $1,700 just in February. I think that was the price. So this is the risk, right? So you need to take that into consideration. Things are out of your control. And the risk number four is that you finish the product and you couldn't sell. So you need to have backup or second strategies for you. So a very good example could be 2005 and 6. Where there was so much overbuilt in Florida and Arizona and some other states, and the prices collapsed. So the builders couldn't get rid of those, right? So that's why we want to stay with the lower level of housing, and that's why we also do build for rent, because if the prices collapsed, we just rent them out and went out, right? That's what we do. But yeah, it's definitely more riskier than just buying an existing property.
Oh, definitely. If you were starting this on your very first go, and you mentioned that you have to get approval for the blueprints and the CAD drawings and everything, before you go pay an architect to create this whole thing? Would it be something like you found some sort of other project, show it to the city? If I built something like this, would it be okay? Some back and forth before you go drop a whole ton of money on an architect?
Yeah, so city typically has a process called pre-approval or pre-application.
Okay.
And no, you need to put a little bit of your own money. That's the risk. It's not much,
Yeah,
but you need to put some money out of the pocket before you even start, and then you go to the city and show what you want to do, and then you would know if they're going to oppose or not on a high level. So there is out-of-pocket risks pretty much from day one. Before we bring investors, we usually do it on our own.
Yep.
So that's the risk we take, and if something doesn't work, we just dodge the bullet. It is what it is, part of the game.
Yep. Maybe pivot, come up with something different. Cool.
Yeah.
Michael, what else did I miss asking you about? Was there some other stuff you wanted to tackle on this?
Well, probably on a large level. So I'll tell you why many people opt to work with us, or some other companies like us. We're not the only one. So we target what we call busy professionals. This is our niche market, and majority of our people are engineers, IT professionals, we got lawyers, doctors. So those are the people just, they know they can build wealth with the real estate investing. They know they can retire probably 10 years prior, but they're working, so they cannot do it on their own for 3 reasons. Number one could be time, number two could be desire to do it, and number three could be knowledge. Well, number four, it's a combination of all three. So the advantage is partnering with a company like us, because pretty much they become passive investors, and all they need to do is just bring funds and sign the papers, right? If everything goes okay, nothing much to do. That's advantage number one. Advantage number two is that the level of entrance to those projects are much lower compared to if you would want to do a deal on your own. So with us, typically the minimum is $50,000. It's US if it's US project, and Canadian if it's Canadian project.
Yep.
Right. So for $50,000, you cannot do any deal pretty much in Toronto. Probably it's not even enough today to put a deposit on pre-construction condo, right? And you don't need to take a mortgage. So that's all you put in a deal, right? So people can do multiple projects, diversification between the projects, and different companies, there's different level of entry. We're a little higher on purpose, but you can start doing the real estate investing without taking a mortgage or putting huge amounts of money in dealing with renovations and everything. So those are the advantages. Well, disadvantage is that you're giving your money to somebody else to do a project for you, right? And people need to be comfortable. So here comes the element of trust, understanding, and investors should be able to sleep at night. If they don't, always tell people that's not for you. If you're going to lose your sleep, that's not for you. Just don't do it. So those are the advantages. I believe United States brings more opportunity than Canada because the price is still lower. The economy is larger. You need to select the right market, the right strategy, the right people to work with, and there's so much more opportunity in the United States. Obviously, it's a little more complicated from tax perspective and the way things should be managed, but the opportunity is there. Yeah. So that's pretty much it.
No, I totally agree, and I've done it both ways. I've invested in syndications. I've done it myself right from start to finish, and they both have their advantages. I wouldn't stomp on either side of it. Working with a syndicator or someone doing the project, it is kind of awesome because you don't do anything. You still usually get a good return, and I enjoyed it. So, but
well, me too. I obviously invest in my own projects, but I've done many projects where I put my own money and somebody else managed them.
I didn't ask you that because I didn't know if that's how you did it, but I do respect syndicators a lot better who actually invest in their own projects as well.
With us, we don't touch the project if the project sponsor or developer doesn't put any money. and that's with us also, right? So there's two things. Number one, it's integrity. If my investors invest, why should not be investing alongside with them? That's number one. Number two, if I can get, let's say, 2% annually on a project, why wouldn't I invest, right? So yeah, we invest alongside with our investors.
Alignment. You don't want to lose your money. You want them to make their money. Everything, it's in point. See, if you're doing sales, you're on both sides, so you got to make sure that it works for everybody.
Yeah,
absolutely.
absolutely.
It's a good way to keep everybody honest. I love it.
Yeah.
Michael, if people wanted to track you down, what's the best place to find you?
Well, our website is www.cfpgroup.ca.
Okay.
And people can just look up my name on LinkedIn. I got over 15,000 connections. So, and obviously on Facebook, you just type CFP Group in the search and easy to find us. We also have a investors community in Toronto. Obviously, because of COVID, we don't do any face-to-face meetings, but we're about to hopefully to restart soon. So those who are local, there is the Investors Inner Circle page on our website. You're more than welcome to register. It's free. It's our way to give back. We don't charge for those meetings. We just come share the knowledge, and people come and network and learn from other investors. So by all means, more than welcome to do it.
Awesome. Thanks so much. And I'll throw that stuff in the show notes too, if anyone wants a quick link to get there. But thanks again for coming on the show, Michael. I really appreciate it.
Thank you, Glenn. Pleasure.